Good morning, everybody, and welcome to TriggerCharts, the pre-market rundown for Friday, September 16th. Actually, September 6th, 2019. I'm Andrew Horowitz, one of the founders of TriggerCharts, and thanks so much for joining me today and each and every Friday where we have the opportunity to share some of the ideas that are going on in the market, some of the economics, some of the news, some of the things that are going on, as well as some of the important technicals. That's really what we're focusing in on, is the important technicals that are going on. So make sure to visit us on TriggerCharts.com, where you can find out all about the indicators that we have available, as well as what is involved in some of the things we'll be discussing today, like the Commander series, the aileron, as well as the things like the banger setup when that occurs. You can also check out everything on the TradeStation trading app store. And if you have TradeStation, which hopefully you do, you'll be able to install a lot of these. Some of these are free. Some of these are for a monthly fee, but you always get a 10-day free trial. You can check out all of these for 10 days for free, unlimited, any stock, any future, anything you want to do. So you can check that out. What are we going to talk about today? So there's a lot of things we're going to talk about, but first, as we always do, we have to put together a little bit of a disclosure. Make sure you understand right there, we'll see on your screen, is that this is only for educational purposes. It is not for specific recommendations of any kind whatsoever. And please make sure you understand that we're really trying to educate you in how to use these tools. Any trading decisions that you decide to do are on your own. So now that we get that out of the way and you understand that, you've read all of this, of course, the important disclosures. Let's get into a couple of things. Number one, I do want to also mention before we start, thank you for making the Commander series the #1 reviewed trading app in the trading app store. The indicator compilation that we have, which has 4 different unique and very powerful indicators, the #1 overall rating, 5-star review, and very popular on the trading app store. So thank you very much for that. Everybody can hear me okay? I see that, so that's good. Let me just kind of click on a few things, make sure we got a really nice group today. That's terrific. So this is growing in popularity. Hopefully we're doing what's right. Again, make sure to tell your friends, because this is a great place to get some insight. So what's happening right now? Well, this week we saw a turnaround. We started out the week on a really negative note as the tariffs kicked in with the increase on a multitude of items, particularly consumer goods at the beginning of this week, starting on September 1st. We come back from Labor Day and wham, we're stuck with some more tariffs. And with that in mind, what is happening is that markets are trying to adjust and absorb what is happening with regard to how this is going to hit margins and what is it going to do for stocks? What is it going to do for the consumer? What's going to happen overall in terms of valuations? So right now, what we're really looking at is the whole idea that markets really need to understand whether or not this is going to be a permanent situation. Are we going to have more tariffs put on in October, in this November, in December that are scheduled in December 15th as an example? And you have to wonder, you know, with all this resilience of the market, do markets really care? Are they just going to pass this on to the consumer and inflation is going to kick up? You can see some of that reaction in gold, of course, and what's happening in bonds. Is it going to be absorbed by companies? And we're going to see earnings hit. And then we get in the middle of all of this, another magical phone call. All of a sudden, there's a phone call from China saying, hey, you know what? We want to get together and do something here, and markets take off. So that Tuesday when we got back, the Tuesday drop-off that we saw on concern about the continuation of this trade war, the slowdown of economics around the world, PMIs looking terrible in Asia and also in Europe. All of a sudden now we're seeing that a phone call and markets just took off on Wednesday and Thursday, because now there's going to be some kind of meeting that's going to happen. The magic of these meetings where we're going to see some kind of hopeful resolution to what's going on is really driving the markets right now, and bulls are grabbing on with both hands and saying, you know what? We believe there's going to be a resolution. Stocks are able to really weather the storm right now. We don't see a lot of concern in terms of GDP and a variety of other areas in the U.S. markets, even though it's hitting there. So why not buy stocks here in the U.S. because they're being managed very well. On top of that, we have to really recognize the Fed is in play as well. September 18th is the next date that the Fed is going to be coming out with their rate cut decision. Everybody believes there's going to be a 25 basis point rate cut and possibly one more by the end of the year, even though the economic numbers don't really show that that's really an important thing to do. They want to get ahead of the curve, and it's priced into the market already. So that being said, Okay. Manufacturing in the U.S. continues to contract. What we saw this week was the first time since 2016 that the ISM manufacturing number actually clipped the 50 line, which is the demarcation point between expansion and contraction. So right now, manufacturing in the U.S. has followed the rest of the world lower, where we're seeing that it is in contraction zone. Not as bad as some areas like China and Europe, particularly in Germany, but here we're seeing a 49 print, and that's really not that good. Now, you'll see a lot of excuses. You'll see a lot of rationalizations out there where people are talking about, not such a big deal. The U.S. is really not a manufacturing country anyway. What do we really care about this for? About 30% of our overall economy is linked to manufacturing. That leaves 70%, obviously, to the service sector. And the service sector came in at 56 and change, a little bit better than expected, not as bad as the slowdown that we've seen in manufacturing. And when we look at the composite, where we blend together the 30% of manufacturing and 70% of the service index, well, what you have there is still a number above the 50 line, still in expansion. So overall, as a country, when we look at our overall manufacturing and services, things are still in expansion mode. That's good. So does it matter that manufacturing is slowing? It does. It's telling us that this pull forward effect that we've been talking about for a long time is a problem. However, it's not affecting all stocks equally. The stocks that are in the areas of manufacturing, maybe even retail, those consumer-related stocks and those stocks that are involved with any kind of that touch that manufacturing area are having a lot of problems. The industrials are not as strong as, for example, technology, which is really not in that area. But you have to keep an eye on this to see where we go. At this point, it does look like we're going to continue to see a manufacturing slowdown on the heels of an overly active and a very excited manufacturing group that put together significant amount of inventories ahead of any tariff increases. We saw the China markets, particularly Hong Kong, bounce back. One of the best days they've had in a long time, and it's going to probably be a best week for a while, as Hong Kong and the government pulled back on that extradition law that they had put in place, and the protesters are looking for that to be done. But at the same time, the protesters aren't backing down. This is a big surprise. Watch China very carefully, because obviously we have a confluence of issues that are going on there. We have geopolitical issues. We have trade war. This Hong Kong situation, there's been reports that in Hong Kong, the tourism industry is down like 50% over the last several months. And there's a lot of companies that are contemplating leaving, and companies that are really slowing down in profitability in Hong Kong due to the fact of all this. And that makes sense. We saw the inversion of the reversion, inversion, coercion. What I mean by that is we saw the 210s invert. Obviously, the shorter end of the curve is still inverted compared to the longer end, up to about 15-year bonds in that time frame or so. We did see that there was a concern about the inversion of the 2 and 10s, and that is and has been historically on 2 or 3 occasions an indicator of recession that's coming in the future. That got back to normal levels. So September is off to a decent start, one of the best weeks. Everybody's concerned about December being a really weak month on a historical basis. When you look at this on a seasonal basis, it's not a good month. So what's happening right now is that we're seeing that there is a little bit of life being brought back into markets due to the fact that we're seeing better than expected numbers in some areas, as well as the fact of the hope for a trade war and the Fed being there. Let's take a look at what's going on, because this morning we did see some economics come out. Expectations were a lot higher. We saw a print of about 130 on the new jobs, or the jobs added to the official payroll list. The unemployment rate at 3.7% this morning. Let's take a look at where we are on this. Yeah, futures don't really care. Futures like, that's okay. You know what? Not too bad, not too hot, not too cold. That's kind of where things are right now, and there's really not a big concern. We did hope for a lot better number, but if you did get a hot number, that would put the Fed totally out of play. And again, markets are really focusing on 2 things. One, they're focusing on the Fed. I mean, really focusing on the Fed. And number 2, they're focusing on the trade war. So those 2 things, with here we are at this Friday number with the back numbers that we saw from the ISM services. So they're in play. Not too much of a massive move on the upside for the growth of the ISM services. Therefore, we're in a bit of a Goldilocks situation right now. And buyers are there saying, you know what? Valuations be damned. If the Fed's going to lower interest rates, valuations are pretty cheap right now. The Beige book came out this week also, and there was moderate growth, some slowing. Again, not a concern there. But overall, the big news has been the consumer's been pretty resilient. Next week, we have producer price index, the inflation numbers coming out on the wholesale and the retail level. We have wholesale inventories and retail sales at the end of the week. Retail sales will be pretty key. We've seen a lot of companies that have really been just taken to the woodshed, slapped around, and then shot for death, brought back a little bit, and then brought back down again. Retail is a really big problem, and whether it's the Amazon situation that's going on or whether it's just the nature of the consumer right now, a lot of retailers are having a lot of problems. Last couple of weeks, we talked about last week, retail came back pretty well. But here we go. Stocks to watch today. And we're going to ask you for some of the stocks that you'd like us to look at. So put that over in the chat. I'll say here, right there. Kevin's also going to put, Kevin's on helping us out today. Kevin Hoffman, co-founder of TriggerCharts, is going to put on the link to the TriggerCharts, access to both TriggerCharts.com, where you can see all these videos. And of course, you can find these on YouTube as well, but also the link for the TradeStation trading app store. You can get a 10-day free trial of all of these. Last week, and I want to focus in on this, we looked at this. We looked at the IWM, the small caps, which are really lagging, haven't done very well. And I wanted to show you where this is going right now. And what we did target last week was about 151.05. That was an important level. And it closed yesterday at about 150.59. Broke above it, but held. That resistance held. So this range still between 145 and about 151, 152, give or take, 151 I'll call it, is really important for the Russell and the small caps, which have been really hurting. A lot of banks are in there, and the yield curve is not helping a lot of these banks. So this is kind of still holding. And what you'll see here, and what we talk about all the time, is drawing boxes, drawing lines. And really, I think this is pretty fascinating. We did move up through that level, a bit of a fake out, closed down below the level. That's important to look at. Held a little bit of an island support that was right in the middle there. So when we look at this, I think that we have to recognize that there still is some work for the Russell to do. The S&P 500 and the NASDAQ both broke out above the levels that were important. Now here we're looking at the Commander series. On the top here, we have what's called the radar. And what's really interesting about this and unique that you really want to look at here is the whole idea that when we look at this particular chart, if you will, there's something that's, I think, really important. Number one, we have the ability to look for multiple time frames on one particular line. In other words, what I'm saying here is, you haven't seen this before because it's not been done anywhere else. What I'm saying is, we look at one stock, for example, SPY right here. Across the SPY, we can see all the time frames on one line. Now you may say, that's not a big deal. It's not done anywhere else on Radar Screen. Nobody's come up with the solution but us. And I'm pretty proud of that. And TradeStation was even pretty amazed that we were able to do this. So I want you to understand that it's really good, because what you could do there is look from right to left. That's the important issue. You always want to look from right to left and go from this side and look to the left. Same thing on a chart. Look left. We always talk about this. In a lot of webinars, I make people repeat it. Look left. Look left. Get that in your head, because what's really important with looking left is we understand the longer term trend. We understand what's happened historically. So we see what's happening now with a big picture. We see what's happened in the past, and look for those levels that are really key in terms of where the markets are moving for a particular security or for a future or for the overall market. So now when we look at what's happening right now, again, let's pick up some of these and take a look at where we are on the IWM, just to get back to that for a second. The same chart here, a little bit lower. We see that the aileron, which is a momentum indicator, which is sold separately, the aileron is actually picking up, and the momentum has picked up just in the last couple of days. And that's a good sign to see. However, we still notice that there's been a tremendous amount of negative divergence, negative movement. Actually, it's not even divergence, it's just negative trend that has been going on with regard to the small cap index. It's still not playing as well as, for example, when we click over to the SPY and wait on this, we see that that breakout happened above that level. Where is the SPY going? That's where you may want to ask. Right now, it's up a little bit, 0.25% pre-market. And when we take a simple tool, whether we want to look at the TradeStation tools very quickly, we can just take a horizontal line. Let's find where our levels are. Well, we know we broke above this key level. That going backwards was really important. We have a long position that was on a couple of days ago, that did call early, a long entry into this, and it did then follow through for a green bar. Very simple. Green is a confirmation of a long entry or a long position. Red is a confirmation of a short position, or if you don't short, you're out. You're not involved. Gray, when you look at gray, gray is saying that's an inside consolidation. Don't get involved in that position when it's gray. When you see that chopping around, just doesn't make any sense. What we really want to find is those vertical fast moves through time. What you want to see is where not this consolidation that moves up and down and simply just moves right like this. We want to find those real good, significant moves down, because you're going to find that when you see that or the significant moves higher through time in a consolidated time frame, those are the most violent and the most potentially profitable areas to look at. So where are we now? Let's take our quick drawing bar and look here. Well, we have a little bit of resistance, probably at about, I would say about 299.20 or so. That's an important resistance level that we're looking at there. However, you have to look at the next level, which is a little bit higher here, and that's probably closer to right about the 300, corresponding to the 3,000 level on the S&P that everybody's looking at. Now, the Qs also, when we're looking at the Qs, it did break out. We saw that there was about 4 days ago, there was a confirmation of a long entry into here at about 187, I guess it is right here. Right here. The yellow is an alert. Confirmation is the green, so about 187. Currently trading at about 191, 190, actually pre-market 192, up slightly. But what do we have here? Here, there's even more resistance. Let's take a line very quickly and look at this. We are right on the resistance point right there, 192.09, give or take. Well, it's exactly where it's trading right now, is 192.09 is the resistance point on this. It really needs to break out, but what's more important about this, we have a very tight level. Let's take a look at this. Right over in this area here, I want to show you. What we have right here is a very tight altimeter. See the range of that right there? Very tight, as opposed to a very wide one here, really wide over here. When we see these tight formations, this is a little bit tight. This is wide. We see these, and you can just easily always just draw boxes on things and find out and look on a relative basis where it is. That would mean that there's a significant amount of resistance going up into that area. Really need to have a significant push in order to move that stock higher at that level. And that's going to be important when it comes to the Qs. And when we look at the Qs, that includes, of course, the NASDAQ 100 stocks. And keep in mind that you're going to see a lot of, I think, resistance moving forward. Gold, a lot of you trade gold and recently been trading gold. And there we go. No, that's not it. There we go. There's gold. Gold was seeing just an absolutely beautiful move on the upside here since about May or so, and the dollar's been actually working against it, which is even more impressive. We saw a big drop yesterday, held support very well. In fact, let's take a look at this. Let's really focus in on where we are. Really landed right on our support level there yesterday. Called for a bit of a short position right here. I'd be wary of the short position as we look at longer term. Gold has been long for 13 weeks that we can see from looking from right to left. There's a short alert here on the daily, and we look at this back on the 240, but I would be looking at only if this kind of momentum really picks up to short, and then where are you going? You got support down at 140, so how much of a great opportunity you have there? Between that and the next level, you do have some drop potential all the way down to right about there. There's nothing here, what we call a hole. And holes are areas, again, where you get this very quick vertical movement through time. Important to recognize that that is an area that we really want to focus in on. All right, so that was gold. Now, GDX. Let's look at GDX. Let's take a look. GDX has been an unbelievable uptrend, again, since about the same time. Came from about a level of about 20 to 30, about 50% move on GDX up. Look at this. This is where the power of this really comes into play. I want you to focus on something here. This gives you really good support levels. You knew where this is going to come down to. It was very clear because you had multiple altimeter points. When you just draw a simple line across, you could have said, well, that's my level. That's my potential stop level. What's below that? How much more thickness do I have in other areas to worry about? So if you're playing this, you know where your stop out's going to be. If you got in right about here, there's another long call, some short calls that happened that didn't play out. Got you out of break even pretty much. But you got this long call, it moved up, got you out on the orange. So the yellow is an alert, very simple. Green is a confirmation for a long entry. And orange is, hey, out of the position, move out of the position. So when we look at this, we were out of the position, consolidation, potentially moving into a long, got called out, didn't really do anything there. The long position really didn't clear up. I'm not sure why we're getting this orange here because it really didn't call for position for long because we didn't get the confirmation. It's kind of confirmed for one day, then stopped you out, I guess, is really the point here. You got stopped out right about here at 30 and change, maybe about 20 cents of a loss. But right now you look, and if you look really closely, you can see that it came right down to its line. Look at that, almost exactly to its line that we had called. And this is not magic. What this is a calculation of market profile and an algorithm that we put on top of it to look for where those important support points and resistance points are. Silver, exact same situation. Look at this. It's a long position, holding long position, came right back into support. It's holding right there, up about 0.5% today. Going down our list, we talked about that. DocuSign as a stock recently came out with earnings this morning up about 22% after it saw a really good number last quarter. However, the outward and forward billings were really not that good. You saw this big drop. Look at this, holding support really well all the way from August. This is a great opportunity that you could have seen a bit of a banger opportunity. Now it's halfway banger, but you saw the support that was really developed and a significant amount of right through there. Look at that. Could not break. Couldn't break. That's a really good sign. When you can't break, and in addition to that, here's something really cool. I want you to really focus on what I'm about to show you here. I'm going to zoom in. You notice how you have a green line, a teal or blue line, and a red line. Same thing all over. Here you only have two lines. I've talked about this phenomena before. What's really good if you hover over this, you'll notice that the cruise and the stall, the lower bound and the midline, which is the support level and the high volume node, are the same. They're overlapping is what's happening here. They're overlapping because it means there's a really strong level of support. When you see that and you look at those strong levels of support, you want to really focus in on that as if it can't break that, maybe things are going to be opportunistic to the upside. We saw a very significant move to the upside, of course, coming into this week and into earnings. And where's it trading right now? 56 and change. Trading 56.42, which is, lo and behold, right on our lines right here of resistance. So about a 22% move in the pre-markets. I talked about this before, PLNT, and I'm going to show you this on, again, we only show you daily. You can do this on 5-minute charts. You can do this on 10-minute charts. I show you daily because it's just an easy training tool to look at. On this, what we're seeing, I'm going to make this bigger because I think this is really one to focus in on the short side. We're seeing that there's been a significant amount of clusters formation on the aileron to the downside. We talked about this last week, primarily focused on aileron. So if you haven't seen that, go over to TriggerCharts.com, check out the video that we did last week, and you'll see exactly what happened and what we showed you on aileron. We really focused on that indicator primarily during the entire session last week. When you look at this, we saw a little bit of a pop back from momentum that did see that come up. There was a great shorting opportunity when you came right into the resistance right there. And when you draw a line across, you can easily see where that resistance is. If you draw the line in the right spot. Going across, there's some resistance here. You have a good level of resistance. And then now what we're seeing here is something important. What we're seeing here now is that there is the potential for a significant move lower, because you look, and what we find is that there are gaps. And right now what we're doing is we're below this level right now, and you have the potential for a gap into this area right there. So 58 is the approximate, maybe 58.5 is the approximate downside view of this. We have been actively looking at this short and dealing and actually utilizing this short in portfolios, and it's paying off. And we think that there is more downside potential. It was recently downgraded as well. So when you look at this chart, what you're finding is there's a multitude of tops that happened here. We have the level that we pointed out a moment ago, which is the resistance level. There's a lot of blank area. There's a tremendous amount of blank area when we look at this, and you look at this blackness overall. And that blackness is an area that we would look for as a whole, as an area that has a vertical potential, high potential for a vertical move quickly through time. And that's the things that we want to really leech onto. So that's PLNT. And if I can make this smaller, that'd be good. All right, let's go back to a couple other ones we want to look at. MNK, this Malincrot, miserable chart. Looks like they're wholly going to be put with a significant amount of fine due to the opioid crisis. And this stock may actually go bankrupt. This is a $25 stock in April. Now it's $1.50. Signet Jewelers had a nice pop yesterday. Another stock that's been under the spotlight. Short sellers really like this stock for a whole host of reasons. But we saw this stock go in April for about 28, and we kind of probably go back further. It's even higher. Yeah, it was back at 70 in October, trading at about 14 right now. A lot of movement on the downside. There was some news yesterday that was good. What you're finding now is, I want to focus in on this again, is once again we have a hole. Now, the other thing you want to look at oftentimes is you want to look at something called the radar. And I don't usually put that on because it doesn't really give us clarity sometimes better than we have with our altimeter, which are the 3 lines here. But if you want to get a refined look and you really want to drill down into where these levels are, really on a very refined look, we look at what the radar is. All of the information, by the way, on training for this is over on TriggerCharts.com. There's also some PDFs that give you some training and a lot of videos as well, so you can check all those out. But what we're seeing here is an area, it has a little bit of a lower B structure here. Not a total, we look at letters, there could be a P, there could be a big B, there could be a lower B. But right now we have a little bit of a lower B where you have, I think maybe I could do this. Let's see if I can do this. Here, I think this is it. See that B structure right there? So the B structure is giving us a look into what's happening with regard to this particular stock and what it is in terms of where the most frequently bought positions are at what price. So we're really looking at volume and price here, and we really break it down under this span of time. So what we're looking at right now, and by the way, all these settings that you see here are already set for you in the indicator. So you don't have to think through what is the best. We optimize this, and I think this is the best settings right now. So let's take, when you look at this, this is the area of potential. You need to move above the area that you have both the altimeter, which is, let's take a look at, wrong one. Which one do I want? All right, I'm not sure what happened to my line. Oh, there it is. Huh, my line tool got hidden. We'll clear all that off. Above that, and it did go above that, but more importantly, what you need to look for, I think, is once we start getting above this level here, 1492, you may see some drift higher, but look at how it stopped right there. That's the level that they knew that if it did go up, this thing could really fly higher because there's a zone right here of blankness. Nothing there. There's no volume. There was a fast move down. Gap, didn't really gap down, but moved down very quickly. And short sellers are going to be very concerned about that. They're going to really want to see that hold, that level, because if it doesn't, it could really break away from them back up to, I would say, somewhere about the 17 level. That would be a significant move off of the bottom where we saw it about 11, about a 50% move on the upside. So when you think about that, you really want to look at where these levels are and what's happening. And this gives you a little bit more clarity when we look at the radar. And you can put as many of those radars as you want on the chart. And this thing's a normal distribution radar. These are normal distributions. It's a little bit of a B. The top end is blank. There's also a P. Again, all of this is explained. Signet Jewelers, would I get involved in this? Not really. I think there's too much risk on this overall. But PLNT was a much better opportunity as it looked at where there was some downside potential. Let's take a look before we finish up today. Futures about 78 on the upside for the mini Dow. We see the SPOOs or the S&P about 8.5. NASDAQ about 18 flat open on the NASDAQ due to the fair value calculation. Any other stocks that you want to talk about? We have 2 minutes left, so get them in really quickly and type them in right here. I covered a couple of them that people have given me on this, so we did cover a few of those already, but it's any more, we have 1 minute left, no minutes left. I think it's 9:30 right now. So we're going to, there we go, the market is open. We're going to end that for today. I want to thank you for joining us, and we'll see you again next week. Tell your friends, go over to tradestation.com, check out the trading app store, as well as triggercharts.com. Thanks for joining us.